Hey everyone, welcome back to Corporate Decoder. Today we're diving into Cerus Corporation's latest 10K report, their annual financial health checkup. Let's see if this blood safety company is thriving or if there are some hidden risks lurking in the shadows, and trust me, with any SEC filing, there's always a story or two to tell. So let's decode. First off, Cerus is all about making blood transfusions safer. They've developed a system called Intercept, designed to zap viruses, bacteria, and other bad stuff out of donated blood. They're selling these systems for platelets and plasma and also something for cryoprecipitation, which sounds like a fancy snowmaking machine, but is actually a blood product used to control bleeding. They are hoping to make their products available in the US and abroad, so they're seeking regulatory approvals so that blood centers and hospitals will start using it, especially in the US. If they can't get these centers and hospitals on board, it's going to be tough for Cerus to keep the lights on and keep making payroll. One product everyone's watching closely is their system for red blood cells. This is still in development. They're running clinical trials, hoping to prove it's safe and effective. But there's a snag in Europe. Regulators weren't happy with some of their data and put the brakes on their application for approval there. Cerus is trying to figure out a new plan of attack, but this whole situation means more costs and delays, and they may never receive any marketing approvals. Now let's talk about the challenges Cerus faces. I'm going to skip ahead in the report to the risk factors section, because in these documents all public companies must disclose all the major watch-out items related to their business. First, Cerus is betting big on the Intercept system for platelets, plasma, and cryoprecipitation in the US. If they can't make it a hit here, it's going to hurt the whole operation. The American Red Cross is one of their key customers. Even if everything goes according to plan, there's no guarantee that everyone will jump on the Intercept bandwagon. Blood centers and hospitals might not see the value, or they might worry about the cost. The American Red Cross or other big customers may impose random requirements at any time, making it harder for Cerus to sell their products. And what if Cerus can't build a strong sales team to convince blood centers and hospitals? They might not be able to get the word out about their products. Also, they don't have a lot of practice selling to hospitals directly. The competition is fierce. If another company comes up with a better product or gets approved first, Cerus could be left in the dust. Speaking of approvals, clinical trials are a huge hurdle. They cost a ton of money and can take years. If the results aren't good, that's a major setback. And let's not forget about the red blood cell system. It's still in development, and there's a chance it might never get approved at all. Government regulations are a constant headache. Cerus and its products are heavily regulated, and keeping up with all the rules can be a nightmare. A big chunk of the funding for the red blood cell system comes from government agreements. If that funding dries up, Cerus might have to pull the plug. They also rely on other companies to sell, market, and distribute their products in certain countries. That means they're putting their trust in someone else's hands. Then there's the manufacturing supply chain. Cerus depends on a few key suppliers, and if something goes wrong with them, it could disrupt their whole operation. Here's the big one: Cerus has been losing money and might never turn a profit. Expanding globally is also risky. Cerus is trying to sell in new countries where they don't have a lot of experience. Protecting their intellectual property is another concern. If someone steals their ideas, or if they accidentally infringe on someone else's patents, it could be trouble. Okay, let's check out the financials. I'm going to jump to the financial statements section. Looking at the balance sheet, cash and short-term investments were around $80 million at the end of 2024, so at least they are holding a decent cash position. Scrolling down to their operations, we can see that total revenue was $201 million for 2024, so the story has some improvement since last year. Finally, drilling down into earnings per share, they lost 11 cents per share, but at least it's trending in the right direction as they lost 21 cents per share the prior year. Here's one last interesting tidbit. Two of Cerus's executives adopted trading plans in late 2024. This isn't necessarily a red flag, but it's something to keep an eye on. So, what's my take on Cerus? They have a genuinely valuable and important technology. The financial numbers are trending in the right direction, but the risks, especially regulatory hurdles and the possibility of losing key funding sources, are substantial and something any investors should take into account. On the plus side, if Cerus can clear these hurdles and get their red blood cell system approved, it could be a game changer. But for now, there's still a lot of uncertainty surrounding the company. Thanks for watching Corporate Decoder. If you found this breakdown helpful, please hit that like button, leave a comment, and subscribe for more financial deep dives.